Welcome to Smart Study ACCA online classes. This is Naveedur Rahman, your F5 performance management teacher, and today we are going to do some questions from our revision kit, and that is our BPP revision kit, and this is basically the second section of your syllabus, which is decision making techniques, right? And we'll do question number 72. We'll start from question number 72. We have done some other questions in the previous videos and you can see them also. So question number 72, and it says, what is the selling price? What selling price will total sales revenue per unit be? At what selling price the total sales revenue per period will be maximized, right? So basically, what should be the selling price to maximize our profit or maximize our revenue, right? Company is selling a product at a price of 120, so this is the current price. At this price, selling 200,000 units, so this is quantity per period. It has been estimated that for every $5 increase or reduction in the price, sales demand will fall by or increase by 10,000 units. So if the selling price increase, the demand will decrease, and if the selling price is reduced, the demand would increase, right? So you can use demand equation for this question, and we'll solve this question over here. So question number 72, the demand equation says that price P is equal to A minus BQ. Well, B is the gradient or the slope, A is the maximum price at which demand is 0, and price is given to us and quantity is also given to us, right? So let's calculate B first. The formula for B is change in price divided by change in the quantity, and as per our question, the change in the price, it says it has been estimated that every 5% increase or reduction, so the change in the price is 5 and the change in the quantity is 10,000. So 5 divided by 10,000, and this should give you 0.0005. so the gradient or the slope is 0.0005, right? Now we have the value of B, we have to find the value of A also. So if P is equal to A minus BQ, and the price as per our question was 120, and the quantity in our question was 200,000, and A should be, we have to find A actually, and B is 0.0005, so 200,000, right? Price was 120. Alright, so if the price is 120, it should be, A should be actually equal to 0.0005 multiplied by 200,000, and this is 100, and 100 will move to the other part of the equation. This will become 220, so A is equal to 220, right? So now we have the value for A and we have the value for B. Now again, the demand equation was P is equal to A minus BQ, and as per our question, price was 120. So when the price is 120 and we have A of 220, B is 0.0005, and the quantity was 10,000. No, that was the change in the quantity. Alright, the quantity was 200,000, right? So this will basically become price is equal to 220 A minus 0.0005 for B, and then quantity. Now this would be a very useful equation. If we call it equation 1, this would be a very useful equation, because this equation basically will help you to find price if you are given quantity, and to find quantity if you are given price, right? Alright, but this is not required from us. The requirement was basically what should be the price at which the revenue is maximum, right? So total revenue is equal to price multiplied by quantity, right? You would agree that if you multiply price with quantity, this is going to give you total revenue, right? So total revenue is P multiplied by Q, right? And if you put the value of price and quantity in these, this is going to give you, put equation 1 in this, so put the value of price in this equation, and this will give you total revenue is equal to price, which is in our equation is 220 minus 0.0005 quantity. So P is 220 minus 0.0005 Q, and that multiplied by Q. So you're simply putting the value, this equation, into this equation. So the value of P in this equation basically, right? And it basically means that total revenue is equal to, if quantity is multiplied with 220, this will become 220 Q minus 0.0005 Q square, right? So this will be the equation for total revenue. Now we have another equation in which marginal revenue, the formula for the marginal revenue is A minus 2BQ, right? The formula for the marginal revenue is A minus 2BQ, right? It's similar to demand curve, demand equation, but the slope is double than the demand equation, right? So it is 2BQ, right? So marginal revenue is equal to A minus 2BQ, right? If this is the case, then marginal revenue is equal to A, which is 220, minus 2 multiplied by B, which is 0.0005, multiplied by Q, right? And we can also say that marginal revenue is equal to 220 0.0005 multiplied by 2 should give you 0.001 Q. Alright, so this is the formula for marginal revenue. And now to maximize our revenue, we would say that revenue is maximum when marginal revenue is 0, which means that any extra unit produced will not increase any profit. Basically, this is on the basis of law of diminishing return, which basically means that if you increase, if you sell more units from a certain level, then obviously this is not going to increase the profit for you, right? And obviously at this point the revenue or the profit is maximum, right? So at maximum revenue, marginal at maximum revenue, the marginal revenue is equal to 0, right? and marginal revenue is equal to 22 minus 0.001 Q, right? So 220 minus 0.001 Q, so 220 minus 0.001 Q should be equal to 0. Now we can find the value of the Q. So Q should be equal to so 220 minus 0.001 Q is equal to 0, and if you have to find the value of Q, then obviously 220 will move to the other side. This will become minus 220, then divided by minus 0.001. This will give you 220,000 units. So basically, if we make 220,000 units, we will maximize the revenue. So at 220,000 units, we will maximize revenue. Now all you have to do is you have to put the value of quantity into this equation, right? And this will give you the price, because at this quantity the revenue is maximum, so you can put the value of this quantity and this will give you the relevant price, right? So let's put these values in the equation, which was P is equal to A minus BQ, and price we have to find. A was 220, the maximum price at which demand is 0, B is 0.0005, and quantity we just calculated is 220,000, and this will give you the price of 220. So you have to multiply first, so 220,000 multiply by 0.0005, and then 220 minus 11 should be, sorry, that is 220 minus 11 should be 209. Let's double check it. So 220,000 multiply by 0.0005, and this is going to give you 110, and 220 minus 110 should be 110. So at 100, if the price is 110, the profit, the revenue would be maximized, right? Let's quickly recap it. It's a bit longer, right? So what we have to do is, we said that if this is the demand equation, we can put the values of P and then the Q, and this will give you the value for A, and now you have the value for A, and you also have the value for B. You have calculated it over here. So this will give you the demand equation. P is equal to 220 minus 0.0005 Q, right? Now what you have to do, you have to find the value of Q first, and once you have the value of Q, then you can find the price at which revenue would be maximum, right? Now total revenue is price multiplied by quantity. So this will give you another equation. Total revenue is 220Q minus 0.005 Q square, right? And now to find the maximum revenue, obviously you have the formula for marginal revenue there, and marginal revenue is A minus 2BQ, and now you have the value for 220 for A, and B is also there, and marginal revenue is equal to 220 minus 0.001 Q, right? Alright, so all you have to do now is you have to find the value of Q. Marginal revenue, to maximize the revenue, the marginal revenue should be 0. So this equation will become 220 minus 0.001 Q is equal to 0. Now if you have this equation, then obviously it's very easy to find the value for Q. So the value for Q is 220,000 units, and then again putting the value for Q in the equation, the demand equation, this will give you price of 110. So at price of 110, the revenue would be maximized. Not fair for 2 marks, but still this was required. BPP questions are sometimes a bit difficult, right, than the examiner's question. This is what I think, right, but I can be wrong also. Alright, anyways, let's do question number 73 now. 73 question says, what is the break-even point for sales revenue per month? What is the break-even point for sales revenue per month, right? This question says that a company makes and sells a single product. When sales per month is 6.8 million and total cost is 6.56 million. So sales is 6.8 and the cost is 6.56. When the sale per month is 5.2 million, the total cost is, so you have another amount of sale and another cost for that. And there is a step cost increase of 400,000, which is 0.4 million. The step fixed cost is 0.4 million when the sale is 6 million, right? So you are given two sets of sales over here, right? 6.8 million and 5.2 million, and it says that the step cost will be included in those sales if it is 6 or above, right? So basically it means that 6.8 million, when you have a 6.8 million, at that the cost was 6.56. This cost includes a step cost. And then the question says, and obviously the second one won't, because this is less than 6, because the sale is less than 6, so this won't include step cost. But the variable unit cost are constant at all levels of output and sales. Alright, so question number 73. Question 73, right? Sorry, let's see the requirements once again. What was the requirement? Break-even point. Alright, if you remember, the break-even point in sales is equal to fixed cost divided by contribution to sales ratio, right? As per our question, when the cost, when sales is 6.8 million, the cost was, when the sales is 6.8 million, the cost was 6.56. So the cost is 6.56, and the step cost, step fixed cost, was 0.4 million. So if there was no step fixed cost, what would be the sale? So the cost without step fixed cost should be, when the sale is obviously 6.8 million at sales of 6.8 million, right? So the step fixed cost, if you deduct it, so 6.56 minus 0.4 would give you 6.16 million. 6.16 million. So if there is no step fixed cost, this would be the total cost, 6.16 million. Alright, now the other set of information says that the cost at sales of 5.2 million is 5.44 million. So if the sale is 5.2 million, the cost is 5.44 million, right? And if you deduct it, this will give you 6.16 minus 5.44, and that should be 0.72 million, Now you see the level of activity change, the cost change, and the cost that changes with the level of activity is called variable cost. Why? Because it changed with the level of activity. Now you have variable cost, right? So how much was the change in the cost? Well, 0.72 million. How much was the change in the sales figure? So change in sales is equal to 6.8 million and 5.2 million, and that should be equal to 6.8 minus 5.2, and that is equal to 1.6 million. So the change in sales is 1.6 million, and the change in the cost, which is the variable cost, is 0.72 million, right? Cost, variable cost divided by sales would be 0.72 divided by 1.6. So 0.72 divided by 1.6 should be 0.45, right? In other words, we can say that if we call it 45%, it will basically means that the variable cost is 45% of the sales. So variable cost is 45% of sales. Now if the variable cost is 45% of the sales, then basically it means that contribution is 55% of the sales, right? And so contribution, therefore contribution is 55% of sales, right? Because let's say if sales is 100 and variable cost is 45, then obviously contribution would be 55%, right? So if contribution is 55% of sales, we can say that contribution to sale ratio is equal to 55%, right? Contribution to sales ratio is 55%, right? And why have we calculated that? Well, let's see. Over here, the formula for the break-even point in sale is fixed cost divided by contribution to sales ratio. Now we have contribution to sales ratio, which is 55% or 0.55. Now we have to find fixed cost. The issue here is that we have got two fixed costs. Let's see. So contribution to sale ratio is 55% or 0.55, and now the total cost at sales of 6.8 million, the total cost at sales of 6.8 million is equal to, we have done it over here, the cost when the sales is 6.8 million is 6.56. Now look, if the total cost is this much, and we also know the variable cost, which is 45% of sales, then obviously if you deduct total cost from if you deduct variable cost from total cost, this will give you fixed cost, right? So at this level of sales, total cost is 6.56 and variable cost is equal to 45% of sales. So 45% of sales, which is 6.8 million, should be equal to 45% of 6.8 million should be equal to 3.06. If this is variable cost, if you deduct this, this will give you the difference, will give you the fixed cost. So 6.56 minus 3.03 will give you 3.5 million. So 3.5 million is fixed cost. Now hold on a second. If 3.5 million is fixed cost at this level of sale, watch it carefully, at this level of sale, the fixed cost is 3.5 million, but this also includes stepped fixed cost of 0.4 million, right? So stepped fixed cost is 0.4 million, right? So at this level of sales, the fixed cost is 3.5 million, but at a lower level of sale in which there will be no fixed cost, it should be 3.1 million because there will be no stepped cost, right? So we will have now two fixed costs. For this level of sale it would be 3.5 million, and for this level of sales it would be 3.1 million because this will not include the stepped fixed cost, right? Therefore fixed cost at 5.2 million sales should be equal to 3.5 minus 0.4 million stepped cost, and that should be 3.1 million. Now we have got two fixed costs, so we should have two break-even points also. So the formula is break-even point in sales is equal to fixed cost divided by CS ratio. So for 6.8 million sales, it should be equal to fixed cost 3.5 divided by CS ratio is 0.55 as we have calculated above. And for the other level of sale was 5.2 million. It should be again fixed cost divided by CS ratio, which is 3.1 million divided by 0.55, and this will give you 3.5 divided by 0.55 is equal to 6.36 million, 6.363 million, 6.363 million, and the other break-even point should be 3.1 million divided by 0.55, and that is 5.636 million. So 5.636 million. Now let's see if we have the answer. Question number 73. So let's see if we have the answer. Question number 73. So 6.36 and the other is 5.636. let's see if we have the right answer or not. So 6.36 and 5.64 or 36. So you can round it up if you want to, right? So the right answer is this. Now if you don't want to waste time on this question, obviously you can see that part B only has two break-even points, right? So even without calculating you can find the break-even point easily, right? I hope it was helpful. Thank you very much. Take care. Goodbye.